It is confirmed. The rental market has started to decline after more than a decade of unstoppable rise. Landlords' finances have taken a dramatic turn for the worst, according to a new survey, which finds that renters are on the verge of breaking. They are off to a great start, already down $10, and they're expected to drop by another $10 in 2023. Yup, prices have dropped by $10. This, we suppose, coincides with a moment when an algorithm at one corporation is quietly raising prices again. So, what does this mean for us? Welcome to Investing Path, and for today's video, we'll be considering the scope of the impending impact as we break down what is going on. New research on which areas are likely to have price drops in the near future, and what you can do to profit from this situation. As of now, the reason mortgages are so costly is that no one is buying one. Since this whole issue is turning out to be a problem that's just getting worse, it is crucial to understand why and how much rents have gone up to begin with. Before we go into the most recent data and a new proposal that would prevent wealthy landlords from buying homes. Now, before we go on, make sure to hit the like, subscribe, and bell button to stay updated for more of our future content. But other than that, let's get started. First of all, there just aren't as many cheap apartments available. The escalating cost of construction, labor, materials, and land meant that owners were increasingly pushed to develop luxury flats in order to recoup their initial investments in the demolition and construction of new buildings. Second, there is a growing interest in renting. Demand has been rising at a record clip since the 2008 mortgage crisis, and it accelerated during the pandemic. In addition, many landlords utilize this as an opportunity to stop providing rental housing altogether. Third, middle and upper class families were also opting to rent rather than buy. They are contributing to price increases because they have the means to purchase more. The costs of maintaining a building are rising, which bring us to point number 4. If they want to keep operating, they'll have to increase prices. Not only that, but the cost of owning a home is also on the rise. Rental prices reflect the fact that today's homeowners face a greater break-even cost than those who made the same investment a decade ago. Here is all you need to know about the most up-to-date information, including where prices are going up and down, and what you can do about it. First, YieldStar, an unexpected piece of software for rental and apartment complexes that takes a somewhat non-traditional approach to generating profit, may be too responsible for the increase in your rent. Their algorithms will tell you whether you should cut your prices to fill vacancies or stay fast until you receive a greater offer. The more precise it is, the higher they may theoretically set their prices. They argue that high demand and little supply are to blame for the current market situation, not themselves. For managers, the software only allows them to respond to trends more rapidly, which is true to an extent, but some contend that this establishes a pricing cartel, which incentivizes landlords to maintain higher prices, thereby generating a self-fulfilling prophecy of continued prices increases. According to their reports, How High claimed that their program might help them outperform the market by 3 to 7%, which would have an effect on prices in large cities. However, here is what you need to think about in terms of where we are now and where we are going over the course of the next several months. When you break it down to the monthly level, you'll see that prices have actually begun to fall. Data shows that in the third quarter of 2022, national asking rents declined by 0.4%, and Rent.com reported that their data showed a month-over-month decline of 0.8%. Since housing costs contribute more than a third to overall inflation reading, this is great news for the Federal Reserve. Consequently, the sooner rents fall, the sooner inflation appears to fall, the sooner we can expect fewer rate hikes, and the sooner we can start seeing gains in the value of my YOLO stocks. Moody's Analytics predicts rent increases of 5 to 7% for all of 2023, but not everyone agrees with that prediction. The Federal Reserve Bank of Dallas predicts rent increases of 8.4% for all of 2023, which is already appearing unlikely. The bad news for inflation is that CPI often lags this data by 4 quarters, so shelter will likely continue to put upward pressure on overall inflation through the first half of 2023. One suggestion seeks to counter wealthy exploitative corporate landlords with measures that would effectively prevent them from collecting rent. This is why 2022 will see the passage of the Stop Wall Street Landlords Act. One-third of Americans currently live in rental housing, and 25% of all single-family homes have been purchased by corporations. Also, for the purposes of anonymity or protection from legal responsibility, individuals might buy property in the name of a limited liability company. As an example, if a home is selling for $350,000 and a Wall Street conglomerate wants to buy it, the sale or transfer tax would be equal to the full amount of the purchase, or $600,000 in this case. This is just one of the many changes proposed in this bill to discourage the purchase of real estate by certain large investors. This legislation also provides these investors with a transition time of 18 months after the legislation's enactment, during which they can sell properties without being subject to the tax. You may be wondering who exactly this bill would apply to. That would be anyone who has more than $100 million in assets at the end of the tax year in question. The only properties exempt from this rule would be single-family dwellings that the taxpayer originally built with the intent of renting them out. Nevertheless, doing so would also render them unmarketable in large quantities. Furthermore, single-family rental communities that were created specifically for the purpose of renting out units should not be subject to 100% tax, especially since such developments would not exist in the first place if not for the rental market. Now, in all honesty, we could see a surtax for specific Wall Street landlords, which goes back into the city or state from which they're buying within. But anything beyond that is going to be difficult, if not impossible, and it doesn't address the root problem, which is simply that we need more homes being built. Now, even though the data shows that rents are falling, not all locations are treated equally, especially if you are in Tampa, because they are still paying 13% more. Fortunately, for renters though, areas like New York are already down 10%, and several parts of the country are starting to post net declines from 12 months. However, 75 of these landlords say they intend to raise rates at least something. The good news is that if you're paying below the market value now, renting a new apartment in the future is likely to be less expensive than it would have been at the start of the year. In general, it is true that prices will need to fall again. As for landlords, there will be a severe lack of available units that was artificially inflating rental rates. Many homeowners will be in a position where they cannot sell their property for the price they would like, so they will opt to rent instead until the market recovers. While a decrease of 20 to 50% in rental cost is unrealistic for the upcoming year, even a decrease of 3 to 10% would make Jerome Powell happy. The bottom line is that knowing the market value of similar units will help you negotiate with your landlord for a lower rent or no rent increase when your lease is up for renewal. Tenants should educate themselves on the market well in advance of their renewal date. But as for you, what are your thoughts about this one? Let us know in the comment section below. But besides that, thanks for watching. This is Investing Path. And if you liked our video for today, then don't forget to hit the like, subscribe, and bell button to stay updated for the latest financing and investment news. Thanks again, and we'll see you soon.